Okay, this is the trading plan for April 10th, 2024. So on the CPI report, the market made a 100-point move, 110-point move down into some better resistance. It took out the prior low and has used almost all of the range for the day. And the range extreme is at 5169 and volume's at 193, which projects to about 5179 is the volume projection, and then 5169 is the range extreme. And on this time frame, we have this balance now, and what we did was we exhausted and broke down through the balance. So the first perspective here is we might have found buyers, and we may have a false breakdown here, which might take some time to develop because the bias is neutral bearish, and the intermediate term bias has shifted to neutral. So that neutral bearish short-term bias is a little bit more important here, and it gets more weight. And there's a balance here between the gap, the really big gap and large move, and the bias, the short-term neutral bearish bias. And it seems like the first good location is probably around the 38% in terms of shorting. If it's weaker, then that's just a sign of weakness and may not be a great short. But if we were to push up into this zone, then that would be a good attempt to maybe get some continuation to test back down into 77. If we exhaust into initial resistance, then that would probably be a good short to get more development in this area. But failing here and coming back down to initial support, if there's some kind of exhaustion, then that could still be a good long because it is the range extreme. Breaking it would be more bearish and would be against this area here at 57, but this is still a larger time frame, an intermediate time frame area, and then this would be an automatic long down here. There'd be massive exhaustion and a larger time frame zone. So that would be an automatic long. And really the theme for today is just be a little careful with trade location, because the move happened in, the 5 minutes after the CPI report. There's a big move that needs to be somewhat digested here. The bias is bearish, but the balance between a bearish bias and a larger time frame exhaustion is what's causing the zones not to be necessarily decent. So I think the first decent zone is 16, and then the next decent zone is 34, and then on the downside, because of the exhaustion and extreme, most of the zones are decent, even though it's against the prevailing bias. So that's the plan.